Good morning, Cam. Welcome back to Trading Success. A hugely volatile end to last week, so look forward to getting into it. How are things?
Yeah, good. Thanks, Chris. Hey, everyone. Thanks for joining. It was a big week last week. We had it was kind of mixed news. What we saw was we had unemployment numbers came out on Wednesday the 5th in the US, and it was a very low, actually, it was an increase in unemployment number. So the market reacted very strongly to that. And obviously, FOMC coming up this week, which is the federal funds rate announcement, the market rallied. So, and then on Friday, we had non-farm payroll, and jobs had increased on that day, or during the month for non-farm payroll. So very mixed news. It was a little bit strange, but it seems like what we're experiencing right now, that you might hear this term coming out on the news called stagflation. And stagflation is where CPI or inflation is rising, but jobs are, unemployment is increasing, right? So you'd expect if unemployment was increasing, you'd expect that interest rates would come down or inflation would come down. But anyway, we've got a really weird situation holding up at the moment. So high inflation, which is they're trying to get under control, and then you've got the unemployment increasing. But then you've got this other news coming out saying that their jobs have increased. So we're in a really weird situation. So that's why, you talk about that volatility. I think traders are very uncertain. There's a lot of short-term trade, and day trading is really the place to be at the moment, because trying to hold a long-term position is very difficult.
Yeah, and you can see,
anyway,
as I've said a few times, you can see big moves when you break it down to that 5-minute chart. You can see a lot of movement in a few hours.
Yeah, it was crazy. On Friday we had big movement, and we'll have a look at the charts anyway. But let's go through news this week, because there's been a lot of news this week, and I'll bring up the chart. Well, there's a lot of news coming up this week. Okay, so this week the big news is we've got the CPI coming out Wednesday night. All right, 10:30 our time, PM. So that's the pre-market in the US. So just be very careful if you're trading the pre-market. Be very on point for that, because generally CPI can be quite a volatile reaction in the news. Really, any of those red flag news, but quite volatile the reaction. And the next one on Thursday morning, 4 a.m. So if you're trading the US close, you've got FOMC announcements coming out from 4 o'clock through till basically 4:30. There's another one. So the movement in prices is pretty insane. And then later on, you've got some Japanese policy rates as well. So you've got two giant economies talking about interest rates this week. So it'll be interesting to see what the Fed Reserve, how they read the news from last week and the CPI news that's coming out. So I think traders will be listening a lot to the press conference.
Yeah.
4:30, that's when the chairman talks. So they'll be listening closely to his words. And as we know, if there's any noise about interest rates being cut, earlier than later, the markets will tend to react very positive to that. If there's still a hold off on interest rate cuts, typically prices or the traders will probably go down. So that's typically how that plays out, that news announcement. But in terms of what happened last week, well, we had a few things. Bank of Canada actually cut interest rates for the first time, so they led the way on interest rates cutting, and I think the European Bank too, the central bank, did as well. Chris, is that right?
Yeah, late last week. I think it was Wednesday or Thursday.
So a lot of news happening in Europe too. You were saying that the French president called the snap election.
Yeah, yesterday. So it was about maybe 6, 7 o'clock last night. I just got an alert that he'd called a snap election, and the euro gapped down about. Well, I think since Friday, it's down about 2% against the US dollar just in
Yeah,
Friday
it's
night
down to
trading and yesterday.
around dollar euro 107 euro.
107, yeah.
Yeah, 107. I noticed around that mark. So that was a big drop because it was getting up around 109, 108. It was around that range.
A week ago, last Tuesday, it was at just over 109. So, yeah, a
Yeah,
lot of movement in 1 week.
yeah, unbelievable. Well, okay, so let's have a look at what happened last week. So we mapped out that balanced range here
Hmm.
last week, and this was the big Wednesday. All right, so Wednesday moved very high on very relatively low volume. Noticed how we're holding off the trend indicator down here as well, and we broke outside of that trend line. So we broke outside balance on Wednesday, and this has left the market what they call imbalanced. So we've got this. I'll put another triangle, another rectangle in there. You can see we've created this imbalance zone here. So what I'll be looking for early this week, and we didn't get it last night, the actual market stayed outside the imbalance zone, but also stayed outside of this prior balance range that we're working with. Okay, you can see how the market went imbalanced on that day, being the 30th of May, really pushed down hard on the 31st of May, and then it came back into this balance range. So now we've gapped out, or not gapped out, but we've created this imbalance zone here. We've flown above the high, and the market is holding above that level. So it's around about that 1900, 19020 number was the old all-time high before Wednesday. So markets are still holding all-time highs. So you can see Friday was this very volatile day where the market tested the high, tested the low, and then it market just seesawed pretty much after that employment news. Market popped up and then smashed down to the low, and then it rallied to the high. So a lot of short-term trade in the markets right now. So if you're playing the NQ this week, I would very much watch to see if the market can try to go back, and you want to see it retest this imbalance zone. If it can cover this imbalance zone, then we're probably likely to see a continuation back down to the trend indicator around that 18,500, 18,600 level. But if the market can hold outside this imbalance zone, then I think the market will continue its rally. But to me, I think it's very much short-term traders in play right now, and traders are very much waiting on FOMC to get some real direction in the short term.
Yeah.
In this market. So, but interesting Monday, where we opened exactly on the all-time high, or very close to it. We tried to test Friday's low, couldn't get down there, and then we're trading within the range of Friday's low at the moment. So we've got this other little, if you want to look at where we are in terms of balance right now, if you want to use balance rules, that candle on Friday is now creating the short-term balance.
Yeah.
So, look for a test of the high up around 19,150. If that fails, then look for shorts back down to the lows, back to 18,975, and then back to the lows of 18,941. And if that fails, then look for it to go back into the range. But if it breaks out of any of these zones, and you see continuation long or a continuation short on the smaller timeframes, then I'd be looking for those trades. So either longs or shorts. But once again, we're in this very, very careful. It's very much up and down type trading right now. Very balanced trading. So that's NASDAQ. Let's have a look at what we got here. S&P very, very similar. You can see we actually came back into balance. So Wednesday couldn't break the all-time highs. Friday did break the all-time highs. But we didn't manage to close outside until we made all-time highs, but we couldn't close outside the balance zone here. But we did it last night on Monday morning. We did close outside. So I wonder what that's trying to tell us. But once again, very, very similar structure. We've got this imbalance zone. Markets come down and try to test it, and we can't fill it yet. So this is quite imbalanced, this market, to the upside. So, very similar to NASDAQ. Well, I'd be watching to see if this market can test and fill this imbalance zone. If it can and holds under, then I think we're going to be in for some shorting.
Yeah, and as you say,
it still wants to hold its highs.
With the FOMC coming up Thursday morning, you probably find it might be just a little bit cagey during the week until people get some sort of direction. Yeah,
that's what we saw. We saw in Europe last night. The market was very two-sided trading, tight range. So yeah, I think wait till Wednesday really. If you're trading, just be careful. I think in the next couple of days, unless you're trading in those US cash markets where there's a little bit more price action, but trading in Europe or Asia, just be careful. Just don't. I think short-term trades, not going for huge targets. But once again, I think if you're trading within the range, selling the highs, buying the lows in a defined range on the shorter timeframes is not a bad strategy. Now, I haven't been following the commodities too much, but I did notice oil came back up into that balance zone that the market.
Yeah.
You can see how we created an imbalance zone here. And traders are loving these zones, by the way. I'm hearing from our advanced coaching sessions, any of our traders that have done platinum, they're really loving that understanding of that, how the market works in structure. And we saw poor structure here, market breaking out, creating this imbalance zone, and now the market has gone back in and it's filled it, and now we're back into the prior balance area that the market tried to break out of a couple of times. So interesting to note if, and this was on the news of strong US dollar too. We had a very good US dollar number yesterday as well. So the US dollar is continuing its a little bit of a rally after a sell-off. So oil is kind of tracking the way the US dollar is running at the moment. So those two markets are pretty much correlated as we know. Oil and the US dollars. Oil's pretty much backed by the US dollar, so they tend to work in harmony. Not always, but you can see, that big reaction last night in the US dollar. Weak euro, stronger US dollar, and the oil market rallied as well. So interesting, markets. If we can get back above 79.43, then probably see a likely rally. But to me, it looks like the market's consolidating still, and trying to break out. You can see there's this downwards trend line the market's tried to break out of, but failed. So if we look at these shorter term trend lines like that, you can see we've kind of tried to break out above it, going back under it. Now we're holding above it. So you'd want to see strength above that trend line for a continued rally to the upside.
And even support or a retest at that 50% mark, it looks like it just would give you a bit more confidence going long.
Yeah. We're definitely in this big range, aren't we, right now? Yeah. Holding above the 50 is, definitely gives you confidence in these commodities. Gold is interesting. If you just look from a technical perspective, we've come back to that older trend line, that older range that was framing the price from around mid-April through till early May when the market broke out. And now the market has gone back into this range right now. But notice where the market's coming back to each time. It's come back to this prior downwards trend line, and now we've got this new downwards trend line as well. So, gold looks like it's trying to correct, and we've flipped our trend switch as well on the daily chart. So maybe a bit more downwards pressure on gold in the short term. So once again, those old trend lines seem to be holding up at the moment.
Yeah, very much so. Very much so.
And Bitcoin, a lot of hype still. It's just crazy what some of these spruikers are saying about Bitcoin. Like, really? Like, there were some people coming out saying, $1 million by end of 2025. It's like that is just insane appreciation. like, but that just fuels, like, that kind of hype fuels traders, right? And particularly when you get around these technical levels, like these downward trend lines, the market has broken once, failed, broken again, failed. So this is sucking a lot of traders into going long right now, and it's just not quite ready. If you're holding, just be really careful if you're holding longer term leverage positions, because this market can just consolidate and flop around and trap people going long on leverage contracts and getting caught out. Let's have a look at the profile. If we look at the profile, you can see this market's hugging the profile's just updating now, but 70,265, that's the most traded price. So that's the point of control. And the market's still struggling to hold above that level. It looks like it holds it for a period of a few days, sucks a few traders in, then it just goes down and takes out their stop losses. So it's real cat and mouse at the moment with the Bitcoin market. But obviously longer term, it's making higher highs, higher lows. It's looking like longer term it wants to go, but timing these trades is really tricky. But you can see we've got this 67, 68. You've got a lot of buying zones down here. These highlighted blue zones are our buying zones. We've found support at around 69 as well. So 69 seems to be the closest buying zone right now. The market's finding support, but if the market fails at 69, then you'd be looking to move down to the 68. And if it fails 68, then you're looking 67, then probably a retest back down to 66, 65. So that's kind of how I'm looking at Bitcoin at the moment. I'm not really that bullish on it. Just long term I am, but short term I still think it's a bit tricky, and there's a lot of people getting trapped on these breakouts, and then the market just sucks back in. So I think you want to see sustained, trading above that 70,000 level to go long, I would say. But,
that's one of the things we covered, I think it was 4 or 5 weeks ago, is when there's so much hype around something in particular and it's on the mainstream news or it's all over YouTube, that's the time to be more cautious.
Yes, that's exactly right. A lot of traders take short positions when there's so much hype because they want to trade against the masses. And because typically the masses get it wrong, and bigger players try to, attract the masses into the market, and with a lot of hype and hyperbole, and that moves the market around. So it gives lots of opportunities. So just be really careful on buying something off hype. You want to do your due diligence and look at the technical aspect, and make sure that support levels are holding up for a period of time before you delve into the market. But if you're trading short term, definitely the liquidity zones, buying and selling off the liquidity zones are great levels to look for short term trades. It's working really well.
Excellent.
So I think that concludes today's wrap, guys. Any other comments, Chris?
No, I think it's probably just a cautious week. It's be careful. I guess revisit your plan because of it. If these things don't fit in and you got a lot of volatility, plus we're waiting on a lot of big news, is to sometimes it's better sitting on the sidelines and waiting for it to play out.
Yeah, absolutely. Yeah, I totally agree. I think just take it cautiously in the markets this week for sure, and come out after Thursday. There'll be definitely some big movement. So just watch that volatility if you're trading the US close on Thursday morning.
Yeah. No, fantastic, Cam. Awesome recap. Thank you.
Thanks, everyone. Thanks, Chris.
No
See you
problem.
next
Have a
week,
great
and
week.
we'll review what FOMC came out with.
Yeah, I know. It'll be interesting. It'll give us some sort of direction, hopefully.
Yeah, absolutely.
Awesome. Have a great week, mate.
Thank you, mate. Bye, guys.
Bye.